The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. I got Tanner Emke back here from CoBank to talk about what's happening in the world of ag economics. Tanner, how you doing?
Wonderful, Casey. Good to be with you. How you doing?
Doing good, man. Tanner's live on location, back helping the family get the wheat crop in. So how's the wheat crop looking out there, Tanner?
It's looking very good compared to last year. Last year there wasn't much harvested. This year we're seeing much better yields for sure, but it's pretty variable. I'm hearing anywhere from 50 to 80, 85 on yields, so that's all over the board. But compared to last year, this is what a lot of farmers needed, a lot of co-ops needed to replenish, need to get some bushels also.
Yep.
So this is a nice break from what we've had over the last couple of years.
Yep. Yeah, you've got your Kansas State shirt on, so email to all the people out there, keep that thrive alive. So Tanner, there's a lot of things going on right now. If you take a look at what's happening, what's happened at the price of wheat over the last 30 days. It's pretty much lost almost $2. I'll probably be right around $2 actually, from where it was. We saw something in the neighborhood of about, I think the high might have hit 735 maybe on the hard red winter wheat. Today we're down about 575, pretty close in that range. Figure basis and everything else in there, you're right around $2 decline that. Harvest pressure obviously is what's driving that. But you guys over at CoBank released a paper on Russian wheat and what that might look like, some effects you see in there. So talk a little bit about globally what you're seeing from the wheat market, and there could be some possible rebound here in pricing as harvest gets as harvest wraps up. Man, I cannot talk today. As harvest wraps up.
Sure, yeah, there's a lot going on. You mentioned wheat's down. Kansas City wheat peaked up around 760, and now today around 580. I mean, that's a heck of a drop over the last couple of weeks, and that's a lot of that is just the harvest pressure coming on. We've got a bigger crop this year, much bigger crop, especially for HRW, which is traded in Kansas City. And so this is coming at a time when the world wheat story is pretty tight. Stocks to use is historically tight, tightest since 2007 globally. And so this kind of raises the question of what's going on with wheat. Why does wheat come back so much when we're so tight? Well, first of all, we got to talk about Russia. That's digested into the marketplace. Russia last year harvested 91.5 million tons. Year before that, they harvested 92. Just phenomenal crop over there last couple of years. Now they're pegged at around 80 million. USDA has them at 33 right now. Private estimates have them closer to like 80, 81, somewhere under that. And so much smaller crop there. This is coming at a time, like I said, stocks to use is the tightest in over a decade, coming up on 2 decades, really. And so what gives? Why are wheat prices down? Well, it's this harvest pressure that we're seeing. And one could argue that wheat is really undervalued at this point. I'm hearing reports of wheat even being bought by feedlots or livestock operators to feed in place of corn. Wheat is becoming competitive with corn for feed rations. Now, if that doesn't tell you something, I don't know. That is a real value. Wheat is oversold, and you look at the technicals on wheat. The relative strength index, the RSI, is the lowest in several months. And additionally, if you go around and look at across the commodity basket, what the speculators are doing, the managed money, they've been piling on. They've been selling wheat. So I think what's happened here is the wheat market really has done an overcorrection to the downside. And given the tightness that we have around the world and the smaller Russian wheat crop and production issues in Europe, it's still raining. It's still cold and wet. We've got some production issues over in Europe. Their production's going to be down. We have India has lifted their import tariff of 40%. Okay, they've been reliable exporters over the last several years, and now they're lifting that import tax because of food inflation. This is in the context of the ban that they had on rice exports. So their 2 basic calories, wheat and rice, have been a concern over there, a concern over in India. So you remove the Indian exports, and now you've tightened the world balance sheet even more. We've had some dryness up in the Canadian prairies, although they did get some rain here recently. We've still got some concerns there. And then in the southern hemisphere, we've got to keep an eye on what happens in Argentina and Australia once we get the northern hemisphere crop in. So once we pull off this harvest pressure of the northern hemisphere, I think the world is going to see that we are really in an oversold situation globally, and we're in for some extreme volatility. And that's what we're saying in this new paper that we've come out with. Although prices have come back by a fair amount, don't let the market lull you into a sense of complacency. We are tight. We have got some continuing concerns with these other export locations, especially like Europe. And so there's no reason here to be sitting back and thinking that wheat is going to be abundant. It is not. The market is responding to these lower prices like we're seeing out here in the plains with wheat being incorporated into livestock rations. At this level of stocks to use globally, you shouldn't be seeing that. And so the market is incentivizing higher usage because of these low prices, and that I think is going to result in some even more volatility later in the year.
Yeah. So let's take a look, spend a little more time talking about what's going on in India, because like you said, India is first time in a long time, first time in about 7 years that they've actually had to import anything. They've been the maximum exporter of wheat, rice, sugar. I mean, you run down the list, and they were exporting everything they could export.
Yeah.
We talked about the harvest pressure issue that you saw there. It seems like the world numbers that we have coming in, I think Russia kind of starting to fall into the same category as China in a lot of ways. Like, you don't know what they're telling you, if it's actually accurate or not, or how accurate it is, right? Is it the 80-20 rule, type of thing coming out of there? But as you look at India, it seems like they're very forthright about what they've got, what they're working through. They're making it very clear that they're working through some pricing structures.
Yes.
As you start looking at the rice scenario around the world, how does that start playing into what the Southeast Asia, India, the other Asian countries that really rely heavily on rice as part of their staple food? Then you start looking at that. How's rice playing into the situation that we're seeing in India and around the world with the reduced wheat stocks that we're seeing?
Well, it's an interesting dynamic between wheat and rice. They're called the sister food grains. There's always that question of how they interplay, and there is some exchange of calories there with some consumers. In some countries, especially like in regions like West Africa, Southeast Asia, those are big importers of both wheat and rice, and so you're going to see some exchange there. With if rice is too expensive, consumers are readily switching over to bread or other or pasta, things like that, that would be cheaper. But globally, it's really hard to tie those two grains together. When you look at a chart of wheat and rice, they're not correlating well right now. Wheat is falling out of bed. Rice has been fairly high because they're being driven by different fundamentals. And rice, we talked about, was really driven by India's action. India is very political on both wheat and rice. They're affecting both markets, but in different manners. India used to control about 40% of the world rice trade. They stepped back, as you'll recall, last year because of food inflation and banned much of their exports. And so that caused world white rice prices to increase, affecting us directly. Also, on top of what happened in India with the rice export ban was what's going on in South America, specifically in southern Brazil, in Rio Grande do Sul, with their floods. That is their main rice producing region, and Brazil is our main export competitor within the Western Hemisphere. That's our playground for exports on rice, and we compete directly with Brazil into Central America, into the Caribbean, into Mexico. That's our playground for the export market, and we're competing head to head with the Brazilians. If you look at Brazilian rice prices, they've just been climbing pretty fast because of that, because of the floods. They've lost a lot of production down there, and the Brazilian government has been importing, in fact, rice. So that's been really affecting U.S. rice prices more than what's happened over the past year with India. That doesn't mean India doesn't matter, because they absolutely do. They put a stronger floor under global rice prices. Now you add in the localized effect of what we've seen in Rio Grande do Sul, and now you've added more upside on U.S. rice prices. So now you step back and say, okay, now how do wheat and rice interplay? Well, you got to go to these countries located in Southeast Asia and West Africa, and that's where you're going to see some perhaps exchange of calories, where consumers are going to be concerned about food inflation with rice. They'll switch over to wheat, and right now wheat would be a buy. But like I said, longer term, I think perhaps what a lot of consumers are going to see is rising rice and wheat prices once we get through the harvest season here in the U.S. and throughout the northern hemisphere.
Yep. Okay. All right, so let's talk a little bit about soybean exports. You've seen China come to the table and get in on some soybean exports here over the last 30 to 60 days. Some of them have been very large. Some of them just been kind of run-of-the-mill stuff. But you're seeing more Chinese buying from on the soybean side of the business. Not a big shocker there. What you've seen in Brazil so far this year, either it burned up or it drowned, one of the two. So there's
Right.
the dynamics that you see out of Brazil, forcing China to come to the U.S. and do some shopping here. I guess as you look at the soybean marketplace, exports there, what are your thoughts there, and how do you see that shaping up?
I think it's temporary.
Okay.
For the time being, the Chinese have been buyers. You've seen those export sales reports coming out from USDA, showing strong buying of old crop soybeans. For all the reasons you talked about there, we had the floods in Rio Grande do Sul that took out some soybean acres. We lost some production in Mato Grosso because of the heat. And then on top of that, Casey, you had the Brazilian government closed some tax loopholes on exports. And so what the exporters did is they were passing on that cost of higher export taxes to the end users by raising their export bid. And so that's made U.S. soybeans a little bit more competitive, and a big reason why the Chinese have come back to the table to buy U.S. soybeans. But it's been old crop only. They still have not bought one single bushel of new crop soybeans from the U.S. And that's why I stress this is currently a short-term story for the Chinese being in demand for U.S. soybeans. It's circumstantial because the Brazilians have kind of stepped out of the picture for the time. And so the concern here is longer term.
Right.
The Chinese are back in right now, but they haven't shown any interest in new crop soybeans yet. Nothing's on the books for the next marketing year. So I think that's the prevailing concern here. Is this is good news right now that we've seen some very strong demand from the Chinese. It's lifted our export sales up year over year about 20% thereabouts. I got to look at the latest numbers here, but it's been a big hefty increase. But how long are they going to stick around is the question. And right now, the Chinese are not signaling that they're going to be around for the duration until they really start stepping in for those new crop sales.
Okay. So let's talk a little bit about some of the pressure we're seeing in the U.S. as far as planting pressure goes. If you look at how, we're right on pace, everything's where it should be, but you're still seeing some areas that were really, really dry that have gotten really, really wet, and they're still struggling to get crops in planted in some areas. Right. I don't know if it's enough to actually cause a big problem. Some of that stuff got mudded in. That was done earlier, and they're waiting for some rain to come through so they can maybe get that crop to come back in without a bunch of replant issues. But I guess, do you think the wet weather conditions that we're seeing in the Corn Belt, that there's any real issues there, or do you feel like it's just more of a news headline than anything else?
I think there's some serious issues.
Okay.
USDA is going to have their acreage report out this Friday, and I wonder if the floods up in the northwestern part of the Corn Belt are actually going to be showing up in these numbers in terms of prevent plant. It's definitely going to be affecting corn and soybean acreage numbers. I think it's probably going to pull those numbers back a little bit from what people are anticipating. I think the market is anticipating probably a bit of an increase for soybeans. If you can't get your corn in, you can switch over to soybeans because it enjoys a later planting date. So I think that's definitely on the table. I wouldn't disagree with that at all. The question is, does the prevent plant impact both corn and soybeans? How much does that factor in? And I've heard there could be about 1 million acres of combined corn and soybeans that are kind of shrink our total planted acreage for corn and beans. We'll see what they show in this report, and perhaps any revisions later on. But I think this is something the market may have undercounted because typically rain makes grain, but not now. Not in this case. Crops don't grow very well underwater.
They struggle. Yeah,
they're in trouble. At the very minimum, if they did get planted, you're gonna see, in those ponded areas, you're gonna see nitrogen leaching or nitrification, those kind of issues that impact productivity down the road. So that's gonna, at the bare minimum, Casey, that's gonna knock off the top end of the yield. And I think the talk of record yields this year is off the table when you've got those challenges. So I think at the bare minimum, we're going to see some of the top end knock off of the yield. And we're going to see some reduction in acreage because of prevent plant. And now that's what's going on in the Western Midwest. I think we still got the concern about the heat in the Eastern Midwest. That's not good. USDA came out with their, not USDA, I'm sorry. National Weather Service came out with their 30-day report, their forecast for Midwest here, and it's going to be more hot and dry, especially for the Eastern Corn Belt. Their 90-day outlook is something similar. Eastern Corn Belt and down in the Delta, Southeast U.S., extreme temperatures. That's not good on yield. So I think right now the market has been lulled into the sense that rain makes grain. But I think when the numbers start coming in on crop conditions, and once we start really getting a handle of what's going on up in the northwestern Corn Belt with the loss of acreage and the lower yields from flooding, I think again, just kind of like wheat, corn and beans right now are oversold.
All right.
Right.
All right, Tanner. Final thoughts here as we take a look at this, going through your thoughts as we head into this kind of July. I can't believe it's already July already, but this July growing season where we're seeing some heat start to move into the area. We're going to be talking about tasseling here before too long in a lot of these areas. Thoughts on the weather pattern that we're seeing right now? I mean, for the last 24 months, it seems like this has been one giant weather market. I can't believe how much we talk about the weather when it comes to these crops. But as you're looking at this July time frame, you've seen the heat that we're starting to see kind of move into the area, and we're seeing more extreme heat starting to come in. Overnight lows are staying pretty high. I guess as you look at that, what are your concerns there? And do you, as you look at the long-term weather report, do you see some opportunity where some of this heat could really hang around through tasseling and start seeing a even more of a reduction in overall yield?
Absolutely. Yeah, July is not when you want to see extreme heat for corn.
Right.
And once June really isn't the big concern. It's going to be July.
Mm-hmm.
And like I said earlier, National Weather Service has got hot and dry for a lot of the corn belt for the next month. And that is not the time when you want to have extreme temps for corn at any rate. So I think the market's going to be waking up to a lot of these realities. The flooding that we already talked about, but we got to keep an eye on what's going on, especially in the Eastern Midwest on heat and in the Delta and the Southeast, and see what happens there. But right now, the current projections are for an environment that's going to take more yield potential off of corn just because of the heat. And once we get into tasseling, you cannot afford to have high heat during that period, as you mentioned. We got to keep an eye on what's going to happen there. So I'd imagine we're going to see a lot more volatility on corn once we get further in the growing season, especially if it's going to stay hot.
Yeah, for sure. Well, a lot of pressure around the world right now, Tanner, seems like on these little blips that we see that pop up all over the place. But the long-term expectations for the grain complex as a whole just seem like we're short on about everything, no matter what the commodity is. So this remainder of 24 and 25 is going to be a very interesting time to watch for sure.
Oh, absolutely. Yeah, I couldn't agree more. That's
That's
agriculture for you.
That's right. It'd be easy, right? If everyone could do it, it'd be easy, right? All right. Tanner, folks want to reach out to you, get more information about what you're doing over at CoBank, how to find your white papers, those kind of things. What's the easiest way to do that?
And just go to our website, cobank.com, and just go to the Knowledge Exchange tab. You find all of our research right there.
It's all free, too. That's the crazy thing about all that. It's all free. It's amazing. All right. Tanner, appreciate you being on the podcast, man. We'll catch you again next month.
Thanks, Casey.
Good luck with your wheat harvest, by the way. Don't do anything crazy.
Hot out there.
Don't be jumping off any grain carts or anything, man. Take it easy while you're out there.
My knees can't handle that anymore these days.
Right on, man. Appreciate you being on, Tanner. We'll catch you again, man.
Thanks, Casey.
All right, I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Check out the YouTube channel, which is the Moving Iron Podcast YouTube channel. And while you still can, go to TikTok and you can see what's going on there. So go to Moving Iron LLC for everything Moving Iron related, movingironllc.com, that is, for everything Moving Iron related, and check out all the information there. So with that, I'm Casey Seymour with Tanner Emke. Let's go do some iron, folks. Out. Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving iron in the 21st century. Hard work.